for ActivTrades Monday Market Matters webinar, how to add to our trades. Thank you very much, Paul. Thank you for the others there. Okay, that's fabulous. Thank you. We much appreciated. So we're going to talk about, as I said, how to add to our trades. And what do I mean by that? I'm going to talk about how we turn a trade into a position, how we could look to build a position, and how we can actually do that. And it is useful insight regardless of whether you're an intraday trader, swing trader, or a position trader. And I'm going to share with you just a simple way that you could do it and add it to your own trading style. So what should we talk about today? Well, we'll talk about, why is it important to add to our trades? What does it actually give us? Who does this? Why do they do that? Okay, and we'll talk about that, giving us a little bit of background and insight into doing that, and then we'll talk about, well, actually, how do we build a position, and what are the ways that a trader could do that? Just utilizing simple price action. I'll share with you just a very, very simple setup that you can utilize as a way and means to add to your trade. If you're already taking one trade, how could you add to it in order to build a position? Then, as always, we'll check on live markets at the end of the session, so be sure to stay with us, and we'll have a little look and talk about about ways that the setup I'm going to share with you today could be found and utilised in the present environment. So for those of you who don't know me yet, my name's Paul. Traded for many years, traded for funds, traded for clients, and primarily I like to focus on trading FX indices and commodities. I tend to be a trend trader for longer term swing and position trades, and I tend to be a reversal and mean reversion trader for shorter term intraday trading. And both of those styles are equally applicable to what we're going to talk about today. So, as always, I appreciate there are always some people joining us for the first time, and really this is our Monday Market Matters webinar, which is all about helping traders start the week in the right frame as we prepare for the opening of the US markets in about 24 minutes. So every Monday, 2 o'clock London time, what we look to cover is a little bit of insight into the news, what's going on ahead of us and what we need to be aware of. Do a major piece on education. So today I'll be adding to trades and building a position. We will always look at the ActivTrades platforms and tools that you have access to as a client, and then we finish off with a look at live markets, okay, as we see the start of the US session and prepare for what might be coming in the session, the day, and the week ahead. So there's always plenty for us to talk about. So let's crack on with having a chat about the news. I make no apology, and I say it every week, but if you're a new trader, okay, I don't expect you to be able to analyze the sort of in-depth economic news, but it is important that you know when that news is coming out, because that might be what induces volatility into the market, and volatility can be a double-edged sword. Okay, when you're on the right side of it, it's the wind in your sails. When you're on the wrong side of it, it can be what causes you challenges. So regardless of whether you've traded for 2 days or 2 decades, okay, all good traders will have an understanding of the economic calendar and where the news is coming out. And so there is an economic calendar on the ActivTrades website. So I implore you to go and find that. And there are other ones around the internet, so there's no excuse to know when that news is coming out. And so last week we had quite a chunky week in terms of lots of news coming out, and also lots of central bankers speaking, and in particular Mr. Powell's comments on Friday. Okay, Mr. Powell, head of the Federal Reserve, and they're what started to sort of, let's say, markets move. A little bit of giddiness, I would suggest, okay, in terms of how they reacted and responded to that. And I think we will see the follow through for that this week as we go deeper into the week and towards the end of the week, and the non-farm payrolls figures on Friday afternoon for us here and on this side of the Atlantic. Yep. If we have a quick look at that, for today we have already had some German trade balance news out, and that was kind of somewhat underwhelming, I think is probably the easiest way to say that. Okay, and both imports and exports were underwhelming, and was just a reflection really of the weakness that we see in the kind of overall German economy. Interestingly, that that is not reflected in the price of the DAX, which we have seen over the last few weeks follow American markets, and just is almost kind of getting towards its kind of 2023 highs. That's been quite fascinating to watch. Tomorrow, well, overnight for us here, we've got the Reserve Bank of Australia have their monetary policy meeting. There is at the moment no intention or no sort of forecast of a change in that. But basically, traders will be wanting to listen to hear any kind of whether there is any either A, change in their own narrative and sentiment, or B, what if any major divergence there could be from RBA policy compared to the US Federal Reserve policy, because it is actually in those differences and in those divergences that's what brings in the volatility. We've also got the US JOLTS job openings tomorrow as well, so traders will be interested to see that to take a almost like a thermometer of the state of the US economy. Wednesday, we've got Australian GDP. Okay, we've got that. We have the US trade balance, which people will be interested, and the Bank of Canada meets on monetary policy. Again, there's no change expected. It is if there's, as I said, a change in sentiment or narrative that we will become interested. Close to home, we also have Mr. Bailey of the Bank of England. He'll be speaking there. I think during the middle of the day, and of course, sterling traders will be interested to see what he has to say. Thursday, we've got Australia and China publishing their trade balances, and then on Friday, kind of the sort of the main element that what people will be looking at is of course the non-farm payrolls. Okay, the US employment data and unemployment rate, and there is also after that the University of Michigan Consumer Confidence Report as well. So there's quite a few bits going on. Certainly for Australian, Canadian, okay, and US, and certainly lots of data coming through there as we speak this week. So as I said, it's important to know when it's coming out so that you can position yourself accordingly. So, excuse me, a little bit of a cough there, but with the news out of the way, let's talk about our main educational element today, which is all about how to add to your trade and how to go about building a position. And as we go through, I will start to add in some elements of my definitions and my understanding, and hopefully it will help you yourselves in the way that you're looking to do that. So it's a case of the reality is most retail traders are usually undercapitalized for their trading objectives. Normally their objectives are quite stretching, shall we say, and they find themselves undercapitalized, and that quite often leads to over trading as traders try to quickly build capital. They think they're trading for income, but actually generally they tend to be trading for growth, as in they need to sort of build their capital, okay, build their trading account. That kind of, let's say, over trading, chasing trades, that rarely works well in the long run as a strategy. But lots of people will do it. Lots of people do it because they think that it is possible and capable of that. And I'm a great believer that anything is possible in markets. I truly am a believer in that. But it's also about probabilities, okay, and we want to have them in our favour, okay, or at least understand them when we're engaged in there with financial markets on a day-to-day basis. But what I want to do today is I want to sort of educate you a little bit and share with you a way that you could use to help build your equity curve by turning a winning trade into a winning position. All right. So what I mean by that is that most people, myself included, you would take a position in the market. Okay, you would take it, and I will take a trade. So for example, this morning, I was shorting a pound against New Zealand dollar. All right, and so I had one particular trade there, just short pound New Zealand dollar. However, when I look to add to that trade, well then, for me, in my definition, that means I'm building a position. So a trade is just a one-off single trade. A position might well be somewhere between 2 to 4 to 6 trades. Okay, normally an initial trade, and then me adding to that trade. And I'm going to show and talk a little bit more about that, give you the sort of details of that as we go a bit deeper into today's session. But just wanted to get that kind of little clarity, a little bit of definition out from the word go. So let's start with a line from Mr. Soros. Now, I appreciate that some people will love him, some people will loathe him, and you are, of course, welcome to your viewpoint. That's what makes a market. That's what makes for a good debate. But ultimately, today we're just interested in this particular quote from him. All right, okay. Regardless of your own personal opinions of him, he was a very, very successful hedge fund manager. And the quote there, it says it all. It doesn't matter if you are right or wrong, but how much you win when you are right and how little you lose when you're wrong. Okay, that was attributed to him. And I think when you're at the start of your trading career, you can hear that and you see it, take it on board as a bit of sage wisdom and all that, and everyone will nod their head and say, "Oh yes, that's the right way to do it." But the reality is, well, actually, what does that mean to us as traders? How do we actually do that? Okay, it's easy to band about great quotes, okay, or sage advice, but the reality is, for most traders, well, that's great, but how do I do it? How do I turn that into a plan, into a trading tactic that I utilize? So that is what I'm going to sort of talk about and share today. So the first way we can talk about, okay, ensuring that we can achieve what Mr. Soros says there is that, firstly, and you will have heard me talk about this constantly throughout all of my sessions here, is that firstly is you're always looking for asymmetric reward to risk ratios in our trades. Ideally, a minimum, I would say, probably say 1.5 to 1, 2 to 1, and above. And this is one of the things that helps us put expectancy in our favor. So very often what we find is that, I'm going to just use an arbitrary financial number just for the sake of the conversation. If I am risking, let's say, £100 on a trade, I want to be in a position to make 150, 200, 250, 300, 400 pound in return. That is an asymmetric reward to risk. But very often what we find is new traders who are driven by a need to win and they want the feeling to win will do the exact opposite. So they might be risking £100 to make £10, should we say? And I appreciate I'm simplifying that a great deal, but I appreciate we do have always have a kind of grand range of people here joining us for our sessions. So for complete beginners, that's what I say we very often find is that traders risking £100 to make £10, and of course they will win a few times, and that gives them feelings of confidence and self-belief, and everybody loves a winning trade, but ultimately as a long-term strategy, that is very difficult to make work, as opposed to the opposite, where it's asymmetric, and that's what I've always sort of, those of you who have joined me here, over the years, will know that that's what I always talk about. That's what traders need to be looking for and aiming towards. So, having an asymmetric reward to risk ratio in your trades is what helps put expectancy, okay, in our favor. It helps us generate positive expectancy. However, I have found from my own trading, from working with traders, from seeing, other traders on trading floors, major leaps, okay, tend to come from when we add to our winning trades and build a position. Right, that's what we walk. And as I said, once again, it's about how do I turn that into something that I can actually do? How do I turn that into a tactic that I can employ? Because I appreciate, it's very easy for me to sit here and say, well, just add to your position, okay, build a position by adding to your trades. It's easy to talk about, but actually, how can I do it? How can I do it in a simple, easy, clear, mechanical way, right, that allows me to do this? And that's where an individual called Joe Ross comes in. And I appreciate some people may know who he is, others may never have heard of him. Okay, well, that's what these sessions are for, to help give you a little bit of education. Joe Ross, the sadly departed Joe Ross, is the kind of trading equivalent of Warren Buffett. He traded for well over 50 years, very well known, very well regarded trader, and he always developed very simple tools that he could use with his trading. And it's something that I've condoned myself. And one of those tools, which I use myself, is called the Ross hook, and that's what I'm going to talk about now. I'm going to talk about how to utilize it to turn a trade into a position. So what is a Ross hook? It'd be interesting to know, if those of you joining us here today, how many of you would actually know what a Ross hook is, or whether you actually already utilize it in your own trading. It'd be interesting to know. But anyway, the Ross hook, there are variations of it, and I'm going to share that with you. And let me just bring up the old drawing tool here. So the Ross hook, okay. The first version, okay, the first definition of a Ross hook, okay. A Ross hook occurs when the number 2 point of a 1, 2, 3 formation is violated, and here's the important element, and prices fail to continue in the direction they were moving as a result of the violation. All right, what does that mean? So here's an example here. This is, what I would call a 1, 2, 3. Okay, there's variations of 1, 2, 3. That, some people might say, well, actually, Paul, isn't that just a double top? And yep, you can say that. Here's point 2. Okay. Ross hook occurs when the number 2 point, okay, of a 1, 2, 3 formation is violated. So it's violated here, okay? It's violated here, and we can see it carries on. And in this particular case, it pushes down and it closes beneath the point 2. But the Ross hook is formed, okay? Ross hook is formed when price fails to continue in the direction it was moving. So if we look at the next candle here, what I would be expecting is I would be expecting price to continue down, okay? But when it doesn't, that is what creates a Ross hook. So let me just draw this in, okay? This now becomes a Ross hook, okay? That becomes a Ross hook. Furthermore, every instance of subsequent failures of prices to move in that direction of the original point 2, that also creates a Ross hook as well. So on a very, very basic level, here we go, let's just what that second point means is that that is the Ross hook, and that the price here basically breaks through that Ross hook again. Okay, that when that fails, okay, that failures of price to move in the direction of the original point 2, that also creates another Ross hook. So this candle closes beneath that Ross hook. The next candle continues. The next candle afterwards, see how the low is higher than this low. That creates another Ross hook, okay? And when we break through it, that candle, breaks through it, but the next candle doesn't. So actually, this becomes a Ross hook, okay? Same here, okay? Price breaks through, carries on, and then here, okay, when it fails it, that is a Ross hook as well. So on the most basic level, we already can see you've probably got 1, 2, 3, 4 Ross hooks, okay, and that's before even add in any kind of advanced ideas. And so what we'd be looking for is invariably is if we have been short here, well then every time price breaks that Ross hook, that is a way and an opportunity to add to your initial trade. Okay, that's what we're looking at. It's a chance for you to add to your initial trade. And so suddenly what become the first sort of simple trade, suddenly you've got 1 add-on, 2 add-on, 3 add-on, 4 add-on. And so now we have a position that is made up of 5 trades. Okay, and this is a very simple mechanical way for us to look at how to turn a trade into a position, having a winning trade, a trade that is going in the direction we want. Okay, this is a way to actually look at achieving that. Another definition of a Ross hook, okay? Another definition is a Ross hook occurs when prices fail to continue in the direction they were moving following a breakout from any type of consolidation, any type of sideways market. So in this particular case, I don't know what instrument this is. I don't even know what time it is, and that's the important thing, because it doesn't matter, because this is price action, which we'll look at in a moment. Price has been going sideways here. Price breaks out here, doesn't it? Price breaks out of that. It follows through. And then here, okay, this candle fails, okay? Candle fails to continue to make a new high. And so this creates a Ross hook. Bosh, that is a Ross hook. And once price trades, this is your opportunity to add to your initial trade, okay? And price trades through that Ross hook, and you can actually see, it then creates this Ross hook as price pulls back a great deal. But that's it. So, when price fails to continue in the direction it was moving following a breakup from any type of consolidation, and that's what we're looking for. Okay, that is the definition. Those are the definitions of a particular Ross hook. And as it says, every instance of subsequent failures of price to move in the direction of the original breakout, that also creates a Ross hook source. There's not one in this particular case, but that's the main one that we saw there. So that's what a Ross hook is. The question is, well, why do we use it? Okay, well, what makes it special? The reason I like it is because it works equally well in all markets and in all time frames. And the reason it works is because it's always revealing a universal truth, namely that there is always a trader somewhere taking profits. All traders might get in and out of markets at different levels for different reasons. They might have all sorts of variations of profit targets. Okay, so whenever there's a breakout or a strong move, okay, there is somebody taking profits. There's always somebody somewhere taking profits. So even here, in that kind of little bit of consolidation, and price breaks out, and then basically price pulls back there, doesn't it, and creates that Ross hook. That's because there's somebody taking profit, and for whatever reason, it doesn't really matter what the reason is. Okay. The important thing is, and this is a thing that I particularly like, especially for, let's say, for new traders, is that when you're trading the Ross hook, you don't need any indicators. Okay, you don't need any mathematical formula, or you don't need any other complications. The Ross hook stands on the fact that it exists. Okay, it is either there or it is not. The Ross hook directly reflects what the market is doing, and you're never going to get that from an indicator. There is nothing to interpret with the Ross hook. It is either there or it is not. And I think that's really useful, especially for new traders, especially for intraday traders where things might be changing and happening quite fast. What you're looking for is the Ross hook. It is either there or it is not. If it is not there, well, you just carry on. If it's there, well, then you have to make a little plan about, is this where you're going to look to add to your initial trade? All right. There's no ambiguity in that sense, and I think that is really beneficial for traders. Okay, I think that is really beneficial. I think that's really helpful for traders, especially I was going to say for new traders, but actually for any trader. Okay, that can be helpful, beneficial as a very simple mechanical way to add to your initial trade and look to build yourself a position. So, as I said, the Ross hook provides a very simple mechanical signal for when to add to our trades in order to build a position. And so, once we're in a trade, we add to our position every time a Ross hook is formed. And here's, where there is an element based upon your risk profile. You are either entering on the break of the Ross hook, or we enter on the break of the high or low of the candle where momentum returns. What do I mean by that? Well, in this particular example, price is broken out, tick, tick, and this is the Ross hook. Okay, that's the Ross hook there. We can see it when it doesn't. So our options are either, we enter there, okay, when price breaks the Ross hook to continue, or we look to trail an entry and enter when in this case, the bearish momentum returns, takes us lower, and we would have our stop above that particular high, okay? And that's what we'd be looking. So this way is very valid. This way is perhaps a little bit more aggressive. And as I said, that depends upon your particular risk profile. So in this particular case, where we see, prices sideways, prices have broken out, prices moved up, we then get a Ross hook here, okay? And your choice would be, do I either add when price breaks the Ross hook, or do I look to add as price falls back, and then as the bullish momentum returns, in this case, as the bullish momentum returns, do I enter back in here with my stop beneath that recent low? That's what we'd be looking for, okay? And as I said, that would depend a good deal on your own particular risk profile. But generally, the important thing is that you can identify Ross hooks and that you're in a position to use them as a way and means to add to your existing position, your existing trade. So here's an example. I'll put in this is a very scruffy example because Okay, that's what markets are like, aren't they? Markets are rarely as pretty as we like them to be. So this was a 4-hour chart on the Aussie against the Swiss franc. It was already S1S, which is my own model. Okay, it's stand one selling, so I'm already looking to be a seller. It was an inside bar on the daily chart, and then what I had here as my entry was it was a 4-hour pin bar off the 200 period moving average. So I wanted to be a short, and so my entry was here at 69.18. Okay, on the Aussie Swiss. And then what we see, my initial target for my trade was down here was 67.76. That was, I had a good asymmetric reward to risk. But actually what happened was we can see, the next candle price broke, the next candle price continued, and then here it didn't, okay? It didn't. So, we have a Ross hook here, okay? And actually, it didn't, the momentum didn't flood through there. It actually went up another candle, okay? And then you had an entry opportunity, an aggressive entry opportunity here or here. Okay, that would be the standard Ross hook when it breaks through the Ross hook, or if you're aggressive, you can do it. So there was what I would call add-on one, which was at 68.88. The price came down, it broke the Ross hook, and then what happened is it came back, didn't it? Came back, and then basically that provided you with another opportunity, 68.53 to be short there. Price continues down, price continues down, price fails to continue down, price pushes up, and then basically you have the opportunity, okay, add on 3 at 68.38. So what was effectively one trade going down to the target became the opportunity to have a position of 4 trades. And in the end, I only took 2 of them because one of these, I think, was like was overnight. All right, it was overnight. It wasn't, even I have to sleep at times. All right, so. But it just showed you, even just in a scruffy way, okay, this was how it was, the initial trade set up, okay, this is how it gave me the opportunity with Ross hooks to add to that trade going towards the existing target, okay, of what I was looking for. And that made a big difference in terms of the overall profitability of that one trade, because suddenly, I've gone from one trade to effectively 3 trades, 3 winning trades out of it, okay. And that's, as I said, right at the start, this is about us looking to find ways to build our trading capital. As another kind of longer term example, so Kiwi against US dollar on the weekly chart, and so price had been in a downtrend, it pulled back to the moving average, and then it was already by my model, it was selling. Okay, it was a stand on selling, and then what we had here was a pin bar. Okay, which is also an outside bar, it's a corn bar, and then looking to basically to initially to get short down to the really big longer term support level there. Okay, so looking for a target in the region of kind of 65 to 65.50. That was it, and actually, this was me being quite aggressive. Was that the opportunity to was actually is that once you move down to the daily chart, there was the opportunity, okay, to the initial the initial trade, and then basically every time it created, okay, Ross hooks, there was an opportunity to add on, because I was already had a bias for the trade, okay, already had a bias. So this was just a case of every time it pulled back almost and created a Ross hook, that was an opportunity for me to add to my initial existing trade. Okay, that's the kind of way we look to work it. An example on silver, just show different times, different asset classes. Silver had been in a very, very big descending triangle. Then it basically here it gave us a pin bar engulfing candle off the red 50 period moving average. There's opportunity to look to get short anyway. Okay, this is actually a price action combination there. Okay, so there's all that going on, and then what we see here is we go down to, okay, the 4-hour chart is the opportunity. Okay, every time price pulls back, okay, it's putting in a Ross hook. Okay, every time, okay, it's giving a Ross hook. And as I said, depending upon your particular risk profile, okay, was you'd be looking at when and how you'd look to be engaging in that particular trade. Okay, so as I said, it's I've already got a bias. Okay, and I'm already I have a short side bias. I have a setup. My initial setup was really nice, just simple price action off the 50 period moving average, and then giving me the opportunity, in this case, on a lower time frame, to basically add to that initial trade whenever there was a Ross hook, which is just effectively just another form of a pullback in a strong trend. So, just a couple of different examples there. And but as always, before you get too excited, ladies and gentlemen, the number one job is, as always, is to manage your risk. That's the important thing. Okay, so for those of you who joined me, okay, we've always talked about normal risk parameters are you never risk more than 1% on a trade. Okay, that doesn't necessarily mean you're risking 1%. You might be risking 0.75%, 0.5%, 0.25%, 0.2%, depending upon your own risk profile. But the idea is you don't really risk more than 1% on a trade. And what we also have is that a rule is that you never risk more than 2% on a position. Okay, remember what I said earlier. A position is effectively it's the initial trade and its add-on trades. Okay, that is how we would define a position. And the way we can manage that and the way we can do that is that invariably what we're looking for is that each Ross hook add-on, okay, trade should be half the size of the preceding trade's capital. So let's say that my first trade is traded at 1%. Well, then the first Ross hook add-on, that would be at 0.5% capital, then at 0.25% capital, then I think about 0.125% of capital. And so that invariably you are never risking more than 2% on a position. And this is the exact opposite of most people, because most people will do a version of pyramiding, but they will do it the wrong way. Okay, namely that their initial trade is very small, and then they will look to try and add on much bigger positions. And so their overall position is like an upturned pyramid. Namely, it doesn't take much for it to wobble and fall over. And that's the same with a trade. Okay, that's the same with this. Okay. So if you need a bit of help to remind yourself that, well then, get yourself, if you've got one, if you've been on holiday, get yourself a US $1 bill, because in the middle of that, you will see that there is invariably, there is there's a pyramid there, and each level of the pyramid is smaller than the last. And then at the top, you have that all-seeing eye. Now, I appreciate some people might have different views of that, but all I'm looking to do is stick one of them up. Or if you watch the TV show Billions, you like your own version of a dollar bill, stick that on your trading video, and just use that as a reminder that if you are going to add to your initial trade, that each existing add-on should be half the capital size of the preceding one, so that you're actually building a pyramid by layer, more so than an upturned. All right, what we don't want is an upturned pyramid, which will just basically wobble and fall at the slightest move. So you're just using that as a reminder of actually how you should be acting when you're operating in such particular markets. So if you remember for what we said at the start, okay, as Mr. Soros said, doesn't matter if you're right or wrong, but how much you win when you are right and how little you lose when you're wrong. And hopefully what you're just learning there in terms of the Ross hook and using it as a way and a means to turn a trade into a position. This is the opportunity for you to help you win when you're right, how little and lose little when you're wrong, because the very nature of the Ross hook, you are only adding to a winning trade. Okay, this is not dollar cost averaging. Okay, this is not just basically, a version of that where you're just adding to your trade all the way up in the hope that it kind of goes in your direction and you've had a better entry price. This is, as price moves in your direction, you are effectively recycling elements of that as a way and a means to give you a position, to build a position. Okay, and that is what we're trying to do. All right, to win, to be larger when we're right and smaller when we're wrong. Okay, and that is the way to do it. And what I normally suggest to traders is that sometimes that can be quite hard. Some traders will find that difficult to follow through on. So what I suggest is have yourself the rules in place, write them down, but just instead of adding at half the position size, just to begin with, even just try adding at the smallest position size possible. It might be, I don't know, it might be £1 on a spread betting account, it might be one micro lot, etc. Get yourself into the habit of doing that. That is what we're looking for. Okay, that's what we're particularly looking how to operate. So here's a few action points for you to take away. Just go and get a few of your previous winning trades. All right, just go have a little look at them. If you've kept screenshots of them, which I would hope, okay, if you're doing the right things, just look at the screenshots of some of your previous winning trades and look at were there opportunities for you to add to them. Okay, were there opportunities? All right, were there Ross hooks there that at the time you probably didn't know, because you didn't know about a Ross hook, you didn't see and stuff. So you look at it now and think, well, actually, there were opportunities to add to them. And think about that. What impact would have been made to the overall result if you had added to them, okay, based upon the rules and method that we've discussed here? What effect do you think that might have had on your overall profitability? And with that in mind, could you devise tactics to add to your existing trading plan based upon what you've seen here today? So, I always give you a little bit of homework to take away, because I think it's important, because, we ActivTrades, we put on, lots of great education, but until you actually take it on board and look at it in your own trading and add on, then it's just, it's just knowledge. Okay. And what we want to do is to be able to help you turn it into into part of your actual tradable action plan that you can take away and work upon. So take that away. Just take a look at a few of your winning trades. Okay, were there opportunities to add them? Well, what impact would that have made? All right, and how would it have affected your overall profitability? And you might see, the numbers might be look fabulous for you. Okay, the numbers, depending upon your style of trading, maybe it doesn't help you, but until you do this homework, okay, the homework will give you confidence and self belief, and that's as a trader, that's always something that you can never have enough of a sort. So, before we go and have a little look at the live markets, okay? So remember, what we've always said through our Monday Market Matters webinars is that, okay, it's always going to be an interesting year in markets, and I think here, as we've entered the last month of it, I think it's fair to say it has been a very, very interesting and eventful year in markets. And thank you for those of you who've joined us, because we've had lots to talk about and discuss. In the essence of what we've talked about here today on the education element, we've talked about the legends, of George Soros and Joe Ross, and talked about really, almost in a way, how to milk your trades, okay? How to milk your trades to add to your profitability, utilizing very simple, clear mechanical way, namely the Ross hook, that is a way you could utilize to add to your trade. And what you have to remember is that each trade should be the kind of half of the capital of the previous one, okay? Because that's one thing that we really particularly look to do, okay? So we'll have a little look at the charts. Paul says, excellent as usual. Any chance of doing Monday Market Matters using Fibonacci in our trading? Yeah, that's a reminder. I will put that into the list for future sessions. Paul, very happy to do that. I will say, if you've got, if there are ideas, people joining us, if there's something you'd like us to look at or something you'd like me to recover, then by all means, we're very open to that. We want these sessions to be as useful and as valuable as possible to people. So that's great, and I will make sure to do that, Paul. So just before we switch across to the live charts, okay, just a reminder of next week's session. So I think we've got 2 more sessions left for 2023, and the next one next Monday, 11th of December, Monday Market Matters, and we're going to talk about how to improve our price action entry. So lots of people will use price action candlesticks as a trigger for their trading. And what I'm going to talk about is talk a little bit about how you could improve that. What is it that you could do to help yourself with that, to just basically sort of improve your edge, because as a trader, we're always looking to improve our edge, aren't we? So if you are already part of us, then hopefully you'll get the reminder. But if you're not, just take a little quick screenshot of the QR code on your mobile phone. I'll take you to the place to register, and I look forward to you joining me there for that particular session. So as always, if you've got any questions or queries, just a reminder that you can get in touch with us. The English desk number is as you can see there, 0207 6500 567, or email at englishdesk@activtrades.com. So what we'll do is, if you'll bear with me, what we'll do is we'll switch across to the live charts, have a little look at the markets, how they're setting up, see what's been going on, and then invariably take a look at the kind of the interesting price moves that we have seen over the last few days. So if you just bear with us a moment, I'll switch across to the charts for us. Okay, so I'm hoping that you can still hear me, hoping that you can see the charts here as well. Bang. And what we've got here, this is just one of the ActivTrades platforms, and I have just here a profile set up. This is just my look at indices, commodities. So I have the Dow here, the Nasdaq, the S&P 500, the Russell, the FTSE, the Nikkei, the DAX, and the oil. Okay, so lots there. The whole idea is to give me just a little bit of a quick look at what's going on, give myself a take on what is occurring. So, whilst we're here, let's have a quick little look here. So, interestingly, Nasdaq. Okay, Nasdaq weekly chart. And the reason I sort of pull that up is that we've had quite some turnarounds there, haven't we, and stuff. So, you're welcome, Brendan. Thanks for turning up. Thank you. I'll follow up on that. Nice to see you, Brendan. Thank you. What we're seeing here, this is the Nasdaq weekly chart. Okay, and what we've done is, you can see it, having been in what was sort of through the kind of the summer into September, October, we had a cracking downtrend. What we did also have a look at was basically a move north here. Okay, so. What we might have been looking at is, let me just bring up the old drawing tool here, based upon when I look at this, it was being in a period of consolidation. Okay, we broke that level, and then basically we had, that was a Ross hook there, excuse me, and there was an opportunity to join that. And now we've gone kind of the opposite way, namely that we have had a really strong push. We can see we've had a really strong push north there. But if you look at this week already, and now of course this is only day one, we've got a lot to go. But I'm interested to see whether we will create a Ross hook here on the Nasdaq. Whether we'll take a little bit of a breather. That will be something I'll be watching this week. Okay, now to see how that particularly kind of plays out. Will that provide us an opportunity there? Okay, on the longer term, admittedly, on the longer term charts, but that's what I will. That's what I'll be looking at there. Okay, see if there's a way we can utilize that. And the interesting is that just as an aside, we can see Dow last week had such a strong week, okay, and has pushed closed at highs of the new of the year, okay, and is also we're back up to these those kind of all-time highs here, okay, at the end of 2021, okay. We're getting back up towards that, and I'll be looking at will there be a Santa's rally that takes us in here, okay, over the next couple of weeks. That's what I'd be particularly keeping an eye on there. And the S&P is lagging the Dow, but you can see it has pushed its way up there towards its recent highs for 2023. And that's what we'll be looking for there, okay, just to try and understand is it going to break to new 2023 highs over the last few weeks of the year. That's what I think lots of people will be looking at. And what has confirmed that is, if we look at the Russell there, okay, if we look at the Russell there on the weekly chart, the Russell has been lagging the other three indices, but we're finally back above the 50 there. That's kind of finally the kind of the bullish move that is happening there. And as I said earlier, that bullishness is still even coming through into the DAX here. As I was saying, the economic data out of Germany has some parts of it have been okay, but a lot of it has left a lot to be desired. And yet, despite despite that, we have seen the DAX, mostly I think by those kind of American moves, has been pulled higher than strongly higher. You can see that, and I would be looking at, once again, a bit like the S&P. Okay, is it going to be the Santos rally? Is it going to drag that to finish the year on a high? Okay, is that what we were going to be particularly looking at? Okay, because that's what we'll be looking at. And if you look at it on the sort of the DAX chart here, what some traders might have been saying is, well, actually, Paul, there it was. Here you go. Let me just bring up the pen here. Paul, we had a 1, 2, 3 reversal here. Okay, that happened. Once we broke, that was the point 2, and once we broke that point 2, well, then this was a Ross hook. Okay, and even if you just had the most basic version, you'd be adding to your position there, a stop loss there. We then push up, and then we create another Ross hook here, don't we? We create another Ross hook there. That would be, buying above there with your stop now beneath there. Price hammers its way, new high, new high, new high, new high, not so new high, and then basically, effectively, that's a Ross hook there. And you'd be looking to buy there with your stop beneath the kind of those recent lows. Price pushes up. Okay, then here that produces a Ross up when this fails to continue up higher. That is a kind of a new level there with a stop beneath. So actually, what you see is you might have been trading the reversal there, but there is kind of like 1, 2, okay, 3, 4, okay, 4 Ross hooks that were an opportunity to add on. Okay, and that would have made in that particular run, a chance to really, kind of trade with it. Okay, trade very strongly with it, and that's what lots of traders would have been looking to do. Okay, as a way, it means when there is a strong trend, how can I milk it? Okay, remember what Soros said. It's about how much can I win when I'm right, and how little can I lose when I'm wrong. Okay, we're only adding to trades that are ploughing in our furrow. Okay, they're going in our direction. That's all we're particularly interested in working in. But that has been quite some move there in the as you can see in the DAX. What has kind of probably been more interesting to people on a recent basis is gold. Okay, whilst we're here now, this is interesting. Okay, we were talking about, this is the monthly chart of gold, and we've talked about it quite a bit over the last few sessions. Okay, namely that every time price had been going up to 2,000, you can see it was getting rejected, wasn't it? Comes up, gets rejected, comes up, gets rejected, comes up, gets rejected. And then what we had here in October, having been rejected in October, we had this huge, big engulfing candle, really big, bullish engulfing candle, okay, which is a sign that, there was buying going on. But then last month, what we were interested in is last month, that was, I would look at that as what we would call like a bullish momentum candle, okay. It's really telling us that we were going higher, and the important thing is that as a monthly candle, it was this highest monthly close ever, I believe. So that in itself is telling you, and then you can see for yourself that this week we've already started. It's been quite an interesting start to the week. If I go down to the 4-hour chart, might be the easiest, because you see the 4-hour chart, we were working our way up, and we had the big round number 2,000, okay, which we've been pushing up against. And last Monday, I think for people who are here, last Monday we talked about how, last Monday we had started the week, we had gapped up, okay, which is, rare, right, to gap up above 2,000. There's clearly, that's because there's a lot of buying support. If you look at the COT report, there's an awful lot of buying going on into gold there, and you can see that last week, we just continued to rise higher and higher. And, we were closing on a high, and then at the start of this week, you can see price basically up, and we ran it was as high as 2140. Okay, we've fallen back from that. So some people might say, well, Paul, that's a really big Ross hook, and I'd agree, it is quite a big Ross hook, but it is a case of that's just an indication of that kind of gold strength, and part of that's linked to dollar weakness. But but also I think an element of the ceasefire in the Middle East folding at the end of last week. You also had some incidents in the Red Sea yesterday, okay, which was will be, I suspect we'll see the real interpretation of that over the next couple of days. We also had Mr. Powell's comments, okay, on Friday, which the market doesn't trust him or doesn't believe him when he says that interest rates could go higher, or they could at least be held higher for longer. The markets are pricing in first interest rate cuts, sort of from March onwards towards kind of May at the moment. So that in itself has an impact on everything as well. So we've seen just a real big move there, but you can see the gold move shot all the way up, but it's come pretty much. Interestingly, we're kind of back below where we closed on Friday there. Okay, that's quite some pump and dump really there, you might say there on that. Okay, it's quite some move. I think that is the daily chart. That is going to be an interesting. I would be looking at that to see whether actually after that do we come back and do we turn 2000 into from resistance here into support. That's what I'll be particularly interested in and looking at, and that's where I'll be going. Let's just finish with a quick look at the US indices as how they've opened on an intraday basis to start with. I'll just take a so I'm just going to bang onto the daily charts here to start with. You can see Dow, had a real bullish, as did the Russell, as did even S&P. Okay, and we've had an interesting start. Okay, if we go down to the intraday level, what am I interested in here? Okay, so what I'll be looking at is we run into kind of a bearish open, but the Dow is clearly leading the way there. I'll be just looking at that. I'm just going to be looking at, it might be said that's been that kind of high of our day so far to today and stuff. I'd be interested to see what if any impact that would have on it. But clearly, that's kind of been the low of it so far. Okay, we'll have a look at that 15-minute chart. I'll be looking at the 5-minute chart there. So for those what I normally suggest is that there you go, that's 1 minute. Normally what I suggest is that I normally suggest you leave it the first 15 to 20 minutes, okay, especially on a Monday, because it can be a little bit volatile, especially if you've had a volatile Asian and European session, okay, and there's clearly been some volatility there if you think about from where we have opened there, okay, at 36,112, we're up to 36, nearly under 36,297. So, almost what's that, about 180 points, okay, in the kind of first 15, 20 minutes. It's quite a big shift in a move. That's kind of looking to shift its way over now. So, it's had a big pump, and then it's moving. And I suspect what will happen is that having had that big move, we might have a quiet kind of first from like sort of 10 till 11. The first half an hour might be a bit quiet as people start to get an idea of what has actually happened. Certainly if you look at NASDAQ has not had the moves anywhere near the same moves. So look at that. I'm just going to, here we go, zoom out. I'm just going to look at something where, So, with you can see NASDAQ here, that was Friday's lows, okay, that was the Thursday, and that was the previous week's lows. I'm kind of interested to see how is the price reacting here. How's the price doing that on the 5-minute chart? That's an interesting, we're just putting a bullish engulfing candle, bullish pin bar there. I'll be interested to see, if we can break, if we are going to have a little bit of a break higher from here. I'll be keeping an eye on this on NASDAQ and stuff, and seeing whether that bullish engulfing pin bar there. Okay, I'll be looking at. I don't think it's a key reversal. 5150. No, it's not a key reversal, but I'd be interested to see if this is the start of maybe a bit of a base at the previous day and previous week's low. All right, see how does the price react to that. I'll be looking at that particular level here. I want to be seeing price breaking that around 1587.50. It's breaking that. That's what I'd be waiting for is just basically to see price. Can it do that? Okay, that's what I'll be looking for. That's seeing is that going to happen, and if it happens, then I'll have a bullish bias. If not, I'll wait to see if what it decides to do once it's here at this particular specific level. That's that'll be the sort of kind of key element there to keep an eye on. Okay, so looking at that, S&P 500 is very much like the FTSE, FTSE is like the NASDAQ. okay, down to the previous day, Friday's lows, okay, and it's reacting there at the moment. So yeah, in fact, it's bounced off it yesterday much stronger than NASDAQ, but I wouldn't exactly say it followed through with any real kind of conviction there. Yeah, I think Dow had a thrust up and has come away. I would be looking for NASDAQ to see how that would be. I don't S&P price action on the S&P isn't as pleasant for me. It's I always say this, when I'm looking at indices, I want them to all to be correlated in their moves, but we've had NASDAQ opening, and NASDAQ opened kind of lower. Here we go. The Dow opened very strongly. Russell has kind of mixed. S&P has sort of just been suppressed. So because there's not much correlation there, okay, at the moment. So as I said, Monday can be like that. Okay, might be that you have to wait in the first half an hour and just let the market settle itself, decide where it wants to go, and then go with that. Okay, but I think my starting point would be just watching the NASDAQ, how it reacts around that previous day and previous week's lows, whether that can act as support, and if it reverses off that. If it reverses off that, that's great for me. But if it fails, falters, well then I think we're in for a down New York AM session. Okay, everything can change in the afternoon, in the US afternoon, but for the US more, I will be watching the NASDAQ there for the to give me the kind of the bias and direction of that. Okay, ladies and gentlemen. So, as I always say, time flies when you're having fun. We're out of time now, as always. So, I hope you found that useful. I hope that's given you a little bit of insight into understanding how you could basically turn a trade into a position, and actually having a very simple mechanical idea and thing like a Ross hook that you can take away and utilize in your own trading. As I said, go back and have a look at a few of your winning trades. Last few winning trades. Were there Ross hook setups that would have allowed you the opportunity to add to your trade in an effort to sort of turn your trade into that position? Have a fabulous trading week, everyone. I hope you have a really great trading week. Okay, and I look forward to sort of seeing you next Monday for our Monday Market Matters webinar. And until that time, trade well, everybody. Cheers. Thank you.